We might as well crack on, shall we? If you normally tune in and follow my webinars, you'll know that I normally ask for anyone to give me some suggestions of some markets to have a look at, and I'll do my best to analyse them for you and go through them. So please feel free to request anything you like, any markets that you're following or trading or just fancying me having a look at. In the meantime, I can start off by trying to choose a couple of markets that look quite interesting. One of my clients was just asking me about oil, in fact. WTI, which looks quite interesting at the moment. Have I got that up? Yeah, it's actually the chart you're looking at the moment. So I'll stick that on the weekly view to start with. And you can see we've pretty much been going sideways. Well, actually, if we go all the way back to middle of or September of 2012, last year. So what's that? About 9 months or so. You can see we've been in a narrowing range. And that range has got much narrower over the last couple of months. We've been nudging this upper trend line, which we tested again at the beginning of this week, 96.40. If you follow my reports, you'll know we had that as a level to watch, and we've rejected it. Come back down. The levels are working quite well, actually. First fib support level 94.44. Well, that's pretty much the low for today, 94.40. We're just coming back to test that now. Actually, my prices are a bit delayed on WTI, but I can see it's trading 94.43. So we're testing that level, and it does look like we're probably going to break lower. Sorry, that's the daily chart we were just looking at there. If I go to the shorter term chart, we've got the same sort of Fibonacci level there. You can see 94.43, 44, and we're just starting to break below that now. You can see that the intraday stochastics on the 4-hour chart, which is something I tend to follow, they're looking quite negative. So a break low wouldn't really be a massive surprise. I could probably stick a trend line on there, actually. Let's just join up some trend line, some lows there. So yeah, we're just breaking below that trend line, actually. And to be more accurate, we probably should do it here. Just join up those two big lows there. I'll change that to... Here we go. If you can see that, if I blow it up, we're just breaking below the trend line now. Sorry, those prices are delayed. We're actually trading 94.22. So we have broken that trend line, and looks like we're headed for 93.82 now. That would be the next target, 93.82.72, the low of that candle. That looks like the next target. We could be there any minute at this rate. It's dropping like a stone. So not a huge surprise. Wouldn't be surprised to see it hit 93.22. That's the Fibonacci target below there. Anyway, oil looking quite negative for this afternoon session at least. We'll just have a quick look at the weekly chart just to see if it tells us anything else. Yeah, it's got some Fibonacci support around 93.92 and a few moving averages around there as well. So 94.0090. We might pause around there on the way, but shorter term things are not looking very positive at all for WTI crude. 4-hour stochastics and gold levels. Any opinions? Sure, yeah, gold. Let's have a look at gold. That's always a good one to look at. If it loads. Yeah, here we go. Right, gold. Weekly chart is fairly self-explanatory. We look under pressure. We are oversold on the weekly chart, but that really isn't particularly relevant. We're in a very nice downtrend, and we haven't broken any support, any resistance that matters. We got close to 14.33. We got to 14.23 and rejected that. So really, this market does look weak on gold, I do feel. Lower highs, so we're continuing that downtrend. Yeah, we are breaking lower today. We've broken the low of the last 2 days. Gold is now trading around 1370. Daily stochastics are quite weak, so there's just nothing really very bullish about gold that I can see. 4-hour stochastics on gold are low, you are correct. But that in itself isn't a reason to buy it, and I'm not very bullish on gold at all. We're now sitting just below a short-term fib, which is 1373. So really below 1367 we've managed to get to and hold so far today. I was looking for a break of 1368 to trigger some sell orders. Well, that didn't quite happen, although we have just held on to 1367, but we're probably going to find 1373, 1376 area now a struggle on any bounce. The only reason that you would possibly want to buy it is because we're oversold on the 4-hour stochastics, but that is never a reason on its own to buy it. You know, there's no point in fighting this downtrend. I'm really not very optimistic on gold at the moment. Let's try and find some shorter term levels. Actually, we could just put some really short term fibs on here, couldn't we? This is the obvious one to do. So if we hold below 1370, we could move quite quickly to 1356, 1355. That also is a fib support level as well as being the low around the 22nd, 23rd of May. That looks like an obvious target. Wouldn't be surprised to see that. Who knows, maybe even this afternoon we could see that one. Wouldn't be a huge surprise. And then if we start breaking below 1354, 1350, we're going to see, I'm quite sure we'll probably see that 1338, which is the low for this year so far, I do believe, is it? No, low for May anyway. So a possible test of May lows coming up. We'll have to keep an eye on that one, but yeah, I'm not very positive. So I kind of agree with what you're saying. 4-hour stochastics on gold are low, but expecting it to go lower, I would agree with that. I think there is a chance of that. Just looking at oil, got close to that 94.00 area, 94.16 so far. Okay, so that's gold. Not a great outlook for gold. Should we try the dollar yen? If anyone's got any interest in the dollar yen. It's worth looking at the weekly chart just to start off, remind us what's happened. Obviously, we've had a huge rally up for all of this year. Topped out at 103.74. You can. I probably need to just blow this trend line up a bit because you can see this works quite well. It's a very obvious trend line. So we're just joining up the lows from the rally. We broke below it, smashed through it, took a big tumble, and this week we've come up to retest it. 99.28 was the high of this week. The trend line is 99.22. Sorry. 99.22, the high was 99.28. Excuse me. So, I mean, you know, pretty much bang on hit the trend line and the sellers came in. So this is really keeping this market under pressure now. We've retested the trend line, we've failed, we've backed away quickly, and the weekly stochastics are negative. It looks like we're probably going to continue lower on this one. Daily chart, just to bring it in a little bit. Actually, there were some Fibonacci's up at that 99. 30-40 level, which I'll show you in a minute on the 4-hour chart. They're quite clear. But on the daily chart, the levels to keep an eye on, well, the 100-day moving average is at 96.51, and I do believe that's pretty much the low for the day. Yeah, 96.47 is the low for the day. Oversold on the daily chart, though, on the stochastics, slow stochastics. I wouldn't pay too much attention to that. We've just eased off the sort of critically oversold area, but the chart in general doesn't look the most bullish chart, so we've got to be careful. We are developing into a nice downtrend here. 9-day moving average, 55-day moving average, that's the red and green moving average lines have held this bounce today, the rally today, or the upside today at least, not much of a rally, and we've come back down below. You can see I've got some Fibonacci levels here at 97.30, 97.45 area. 96.51, that's the 100-day moving average, and if we start breaking below there, that's probably going to increase the selling pressure. We can get a good picture of dollar yen by looking at the 4-hour chart. You can see I've got some Fibonacci levels on there, and 99.30 area was quite a big one with some overlapping fibs there, and that held nicely. If you follow my reports, you'll see that I was calling that a selling opportunity, so I'm pleased that did hold and we did come back off again. I actually thought we'd probably hold around the 97.00 area at least on that bounce, on that sell-off, but we plunged through it, although we're hanging around the area now. But the daily chart, sorry, the 4-hour chart is also quite negative, so really we're probably going to struggle around this 9700 area, and I would reckon the chances are we come off again, test the low of this previous 4-hour candle, 96.47. We know that's the low of the day. We also know that that's the 100-day moving average line. So we'll see what happens there. But we've got a fib level at 96.28, and you can see a couple of lows on some candles there as well, just to confirm that. So we start breaking below 96.20. There's not a lot to stop us heading towards last week's low, which is 95.00 area, 95.50, 95.00. We'll probably see those. Yeah, dollar yen not looking too good. Let's just try and find some longer term support levels if we do happen to continue lower. So obviously last week's low, 94.99, is probably the next big support. If we break the 100-day moving average around the 96.50 area, we'll probably see last week's low around 95.00. As I said, when we looked at the 4-hour chart, there's no other reason for that to be it's not a huge support. You can see a couple of lows and a couple of highs around there. So a break below 95.00, the next big weekly fib support level at least is 93.57. So that will be about 1.5 cents below the 95 area, and we'll probably be looking at that as good support this week. Daily chart's already a little bit oversold, so maybe by the time we get there we'll be quite oversold on the daily chart, and maybe that could mark the low for the week, 93.57. We'll have to watch that level and see what happens. So yeah, that's pretty much it, I think, for the dollar yen, unless you'd like me to go over any more of that. Same theme, I guess, as the Nikkei. If anyone looks at the Nikkei, we could just have a quick look at that one, because that's been in all sorts of trouble lately. You can see from the weekly chart. We'll start on the weekly chart. Yeah, it's sold off heavily the last 3 weeks. We're holding last week's range this week, but this is probably just a pause for breath on the way down. I can't see any big reason to be looking for a bottom in this market yet, certainly not on the weekly chart. You can see I haven't got any major support levels to look for until we get to 121.15, which would be a 50% retracement of that rally up from the middle of last year. So that 1 year rally, a 50% retracement would be 121.15. We could hope to find some support there. That would be a target for us anyway on the downside. 126.75 is the 100-day moving average, so really we've not got much till then. We've already been around there, but we could revisit that. We're not looking too strong on the daily chart. This is the daily chart we're looking at now. We're really just recovering from a very oversold situation. So as I said, when we looked at the weekly chart, probably just pausing for breath on the way down. That looks like a likely scenario rather than having found a bottom and expecting a big rally. I don't think so. There's a nice trend line there which I should expand so you can see it more clearly. Okay, there you go. Textbook stuff really. Broke the trend line, headed lower, bounced again, a bit like the yen, retested the trend line and has failed to break it, so pressure remains to the downside. All we're doing here is unwinding from an oversold scenario on the daily chart, but sooner or later it looks like we'll hit some selling pressure, retest the 100-day moving average at 126.75. And then below there you've got the last week's low at 122.90 to watch. No reason why we can't break below that. And as I said, I think it was 121.15, wasn't it? That was the level below there. 121.15 it was indeed. That would be our next target. So there's just 3 levels to watch there really. The 100-day moving average 126.75, last week's low 122.90, and then the fib level of 121.15 on the downside in the Nikkei, which would be our targets. But hopefully 121.15 would be good support. What's the 4-hour chart telling us? Same sort of story really. The 4-hour chart got very oversold when we hit those lows on, I think it was Friday. We've had a nice bounce. We've nicely unwound that oversold scenario on the 4-hour stochastic. We came overbought with a relatively small bounce, and now again 4-hour stochastics are turning negative after we topped out. So yeah, that kind of ties in with the view. Not too positive. Everything's looking quite negative. A bit depressing. Let's have a look at the euro, unless anyone else has got any suggestions. Okay, so euro. The weekly chart been in, well, if we just go back as far as 2011, it's been in a downtrend. We've managed a little bounce throughout the end of last year and the beginning of this year, but not doing a huge amount. We've just managed to barely hold on to this trend line you see here and had a little rally off it. So let's have a look at the daily chart, see if it can give us a better picture. I've got some trend lines here. Blow this one up again. So you can see this one's holding quite well. End of last week, was it? Yeah, we hit 133.06, so we've just held below the 133.18 trend line. We've tried to revisit that area today. We only got 132.99. So not looking too positive. Overbought on the daily stochastic, and failure to break that trend line looks like it's going to keep us under pressure. We're going to have to watch that 132.30 area, sort of 132.40, 132.30 area, which is holding at the moment. You can see that's a bit of a fib level, but wouldn't be surprised to see that break. Shorter term, this is probably going to give us the best picture for the end of the week. So the 4-hour chart, we just look at this rally. We've got a bit of a double top. We rallied up, came back, held the first support level at 131.86. I think 78 was the low yesterday. Yes, it was. So we bounced quite nicely off that first fib support. That's quite a nice little double top there. We should probably now head back to this 131.86.78 area, I think. Who knows, maybe as early as this afternoon. Not looking particularly strong, this market. And then obviously a break below the 131 sort of 70 area is going to keep us under pressure. We'll be looking for the next fib support of 131.11, which you can see worked quite well as a level on the way up. So it should work fairly well as support on the way down, and I'm guessing on the 4-hour chart we'll start to probably look a little bit oversold. So we may see a little bounce off here, at least on the first attempt. Who knows, we might get back up to the 131.80, 90 area. Beyond that, I wouldn't like to guess. But in the immediate next 24 hours or so, looks more likely that we're going to head lower than higher. Of course, if we do break above 133.06 and start to head higher, then the trend line, well, we've really got to clear 133.30. Well, actually, do you know what? We've really got to clear 133.40. You've got the trend line, you've got Fibonacci. That 133.40 level is going to be a struggle. Even if we do push higher, and if we do break the 133.00, I'd be surprised if we break 133.40. So there's all sorts of resistance on the way up, so even if we do find some buyers, I don't really see a huge amount of upside in this market, and there's a few levels to sell on the way up. So yeah, euro also not looking too positive, is anything. Cable pound versus Swiss franc. Yeah, sure, happily have a look at that one. Not one I normally look at, so just give me a couple of minutes to try and make some sense of it. EG, what's EG? Right, weekly chart is always a good place to start. Euro GP, okay, sorry, thanks for that. I'll do that after, thank you. Okay, so yeah, 2008 had a big old sell-off down to 2011. We've managed a little bounce. Strokes and fibs on there is always a good guide. Okay, we managed to beat that 146.55 area, but we're struggling there now. Bit overbought on the weekly. We've failed at the 55-week moving average. Okay, so not looking too positive on the weekly chart, I wouldn't say. Just a very slight downtrend there and holding below the 200-week moving average. So let's see if the daily chart says anything is a little bit clearer. We've got a bit oversold there. What are these Fibonacci's telling us? Not much, really. Okay, so very short term, just over the last couple of months from the end of February, we've had a rally. It's a corrective rally, we're in a downtrend, that's obvious. So it's a corrective rally. And we started to sell off again. We got very overbought, but we stayed overbought for quite a while we continued higher. And the fib levels are working fairly well. Okay, 144.00 is the 100-day moving average, and it's also the 50% retracement, Fibonacci retracement. So that's good support, and that's held today. We are quite oversold, so yeah, we could get a bounce from here maybe. Nothing spectacular. No point in fighting the longer term trend, which is down, but the shorter term trend is up. We retraced 50%. So yeah, why can't we look for a bounce from here? We've got quite oversold. Don't see anything, and I'm not expecting anything massive on the upside, but a little bounce which we could use to sell into shorts perhaps, I think will probably be the best strategy. Buying into longs is probably less safe than selling into shorts on a rally. 146.06 is a moving average. That ties in with the 146.19 Fibonacci level. We've managed to get to 146.06 yesterday. Okay, so that's held. So that sort of area is going to be a struggle. If we got up there, that might be a nice place to sell it. Let's just see the. Oh, you agree? Okay, that's good. I like it when I'm not out on a limb. Okay, so let's have a look at the 4-hour chart and see what that tells us. Yeah, not very oversold, but it seems there's buyers when we get in there. Look at these spikes. There's definitely some buying interest down there around that 144.00 area. So someone wants to buy it there. Yeah, okay. So I think probably looking to sell into shorts, not here. Let's see if we get a bounce first to some better levels. The short-term fibs are obvious, 144.94. So that 145.00 area would be a first target. Not sure if I'd be getting short there actually. I wouldn't be surprised to see it break through there and then look for 145.60 and possibly even that 146.00 area, maybe somewhere within that band. It might be worth trying a short. That's a decent enough recovery. 147.00 you fancy, do you? I wouldn't rule it out, but 61.8% is around 146.57. So, well, if you can hold on and get 147, I think you'd be doing very well. Yeah, I would agree with that. Not so sure it'll get that far, but I hope you're right, because that probably would be quite a nice area to sell it. Just let me have a look on the daily chart, 147.00. Yeah, that'd be lovely. 200-day moving average at 146.82. So that's quite a nice level that you've got there. Yeah, if it does get there, there's no reason why it won't. Then yeah, I would agree with you. I would say that would be a very nice place to short it. Certainly worth a try. You can have a relatively tight stop there as well. So yeah, I quite like that one. Yeah, good spot, that level. 144.00, 143.90. Maybe we need to jump into some shorts there because that should trigger some selling, and really 143.15, 143.00. We could get there quite quickly. So I guess those are the levels to watch there. But I do agree with you. Euro GBP. Yep. Let's have a look at that one. Just seeing oils hit that 94.00 almost exactly, 94.04 we've bottomed at, so we might have a little bounce here, but 94.40, 94.50 will probably struggle in WTI if you're trading it. Okay, again, Euro GBP, not one I usually follow, so just give me a few minutes to Okay, fibs are working quite well on the weekly chart. Downtrend through 09, 10 and 2011 and 2012. We've had a bounce. We bounced 50%. That held almost exactly. But since then we've gone pretty much sideways. Okay, so longer term trend is down. That's fairly obvious. Trend lines are working very nicely. Can you see that one? That works. That's worked. Blow it up just to make it clearer. So in effect we're in a channel heading lower. I'll just make that one clear as well, sorry. Put that in red, blow it up. Okay, so there's our channel on the weekly chart. We've held the 50% fib, as you can see. We're up around the top of that channel. So in theory, we should head lower, looking at that weekly chart. The pressure should be more to the downside than to the upside. We've got the 200-week moving average around there somewhere, haven't we? I think we're almost bang on it at the moment. 200-week moving average, yeah, 85.16, so we're just hovering around there at the moment. We've got a little bit oversold on the weekly chart, but I wouldn't pay too much attention to that. It's a gently downward sloping channel, and we're unable to break through the top of it. I think that's what's crucial at the moment. So we'll look at the daily chart. Yeah, we come off a little bit. It's really just gone sideways, isn't it, since since here, middle of March. Almost 3 months, we've just been stuck within that range. So I guess all you can really say here is just watch that range. We've got this sort of 8600 area on the top side. We've got around 8400 on the downside. If it's going sideways, trade the range. That's the rule. There's nothing else to say there. Trade the range. You know, we've held mid-range around 8600 is the high, 8400 is the low of the range, and 8500 is the middle of the range. So really, I guess those are levels to trade. 550 area is roughly where the 100-day moving average is, so that's got some significance, and it's certainly holding the upside today. Other than that, can't really say. Just watch those levels really, and then wait for the break. Which way it breaks, I don't know, but judging by the weekly chart, probably down. Would feel safe for short and long, but at the moment you can see we're just going sideways really. So trade the range. It's always nice to have a range that you can trade. It means you don't have to do any work until we break the range. It's quite a nice, easy and lazy way to trade, I guess. 4-hour chart isn't saying much. Again, got a little bit overbought, but doesn't. Stochastics and overbought, oversold don't matter that much when you're just in a ranging market. It's sort of maybe worth keeping an eye on them, but they're not particularly important. Anyway, we might head lower. We're in the middle of the range. If we start heading below 8500, then we'd probably be looking for 8400, and we'll just have to see whether that level holds or not. Beyond that, can't really guess. I'm afraid oil's made it back up to that 94.40 level. So let's see what happens there. It could hold here and start selling off again. Don't know why I'm so focused on oil today, but some of my clients are mentioning it, and it looks like it's working quite well. Anything else anyone would like me to look at? Stock markets, any energy markets? Nat gas is probably worth a quick look. I'll show you why. This is the weekly chart of nat gas. What's relevant here is the 38.44 Fibonacci support, and also the 200-day moving average at 30, not far off it, 38.14, and we're just sinking below that now. So nat gas probably in trouble. Probably headed towards this trend line here. Hopefully you can see it if I just put my cursor over it and expand it a little bit. You'll see there's not really an awful lot to look for until we get to 36.45 and the trend line at 35.83. So I think nat gas, probably having broken lower, will continue to sink. Maybe that ties in with a few of the energy markets. We could possibly have a look at a couple more of those. But the daily chart, yeah, look at that. We're sitting below the 100-day moving average now, 38.09. So shorter term fibs were just breaking below there, so really not very positive for nat gas. Getting oversold on the daily chart, but not anything near enough to start thinking about buying it. And as we're breaking these support levels, probably not a good idea to be long this one. We've broken lower on the 4-hour chart. Yeah, not oversold enough to really be worrying about looking for major support levels yet. So that's kind of the same as oil, which is backing away from 94.40, so that level's worked quite well. Oil's coming down again. Nat gas looking weak. Silver. It's a new one for me. If it loads, yeah, here we go. But I had a few requests for it, so I started to chart it, and this is Well, it's not that similar to gold, but it's certainly in a downtrend. The chart doesn't look. The chart looks fairly similar. I think this has been even weaker than gold, to be fair. But anyway, silver looks under pressure. Yes, it's oversold on the weekly chart. No, we're not finding any major support levels. Actually, we bounced a couple of days ago off 2033, which you can see was sort of a high in the middle of 2010. What was the high in 1982? We got to 2033, so not far off it. So that's probably why we bounced around there. But silver's looking weak. Oversold on the weekly chart, but I wouldn't worry too much about that considering we're in quite a steep downtrend. Daily chart, stochastics are still pointing low. You just can't fight that trend, can you? Look at that. Down, down, down. So retest of the low from the 20th of May is looking likely at 2033, 2034. Short term, yeah, it's just a trend. We're holding. Okay, so that's why we've held. That's why we bounced off that 2141 area, because we've got Fibonacci support at 2147-ish. So that's actually holding. We bounced off it. We got oversold on the 4 hour, so fair enough that we bounced off that support level. Not a massive surprise, I guess, but we failed to get through 2218, which was a very good resistance level on the top side. I think I had that in my report yesterday. In fact, we didn't quite make it to 2218. We got to 2209. Backed off again, retesting that level. I don't fancy it to hold. Looks like silver could break lower, so watch 21.1, which is the low from last week. It looks like we can break that and continue down to at least 2100 area, 2090, and probably beyond, probably further down. Not looking positive at all for silver or gold. Okay. We've got some time, so if you want me to look at any other markets, I'll be happy to. Copper is one I've been looking at as well. I've just started charting that one this week. Had a few requests for it. So if you're interested in copper at all, blimey, is anything positive? I don't think we've seen anything that looks positive at the moment. Weekly chart for copper, been going down. We got very oversold on the weekly chart at the beginning of, end of April, beginning of May. We have three little lows there. Look at those three little spikes, which, and again. So this downtrend is just continuing. Weekly stochastics, not particularly positive either. The daily chart also looks negative. Guessing that is some sort of fib resistance that we hit there, is it? Not far off it, 50%. We traced almost 50% of the move lower from the end of January, so held below it. Tried it again, couldn't do it, and now we're sinking. 318 area is some support, and we're just testing that today on the copper futures. But it's good support, but we are oversold on the 4 hour chart. But I'd be wary of buying it here, because really the overall pattern looks quite weak. If we get a bounce off this 318 area, then that might provide us with a selling opportunity on a bounce, and we could get it looking at the 4 hour charts quite oversold now. We've come down quite a long way. We've been falling for 1, 2, 3, 4, 5 days. So yeah, after a five day fall, I guess there is a chance of a bounce from a relatively good support level in copper, but I'd be more likely to be waiting for a bounce to sell rather than trying to pick a bottom here. That looks a bit too risky. 322, 323 area looks like quite solid resistance. So maybe if we got there, that would be a chance to get a short copper. Let's just see what the short-term fibs are saying. Yeah, 323. Also ties in with the short-term fib, so we've got 322, 323 as a potential selling opportunity if we get a bounce to there. When did I look at gold? I did look at gold, but I'm happy to look at it again if you've missed out. Yeah, I'll just recap quickly. Gold is in a downtrend. This is the weekly chart. It's very obvious. We're oversold, but that's not particularly relevant on the weekly chart. Daily stochastics are quite negative. I wouldn't trade off the stochastics, but I do like to keep an eye on it because they can be quite a good guide on occasion, and especially if they work with the trend. So the trend is down, and as I said earlier, we failed to get anywhere near 1433, which would have been the first resistance level. We failed $10 below that, and we're heading lower again now. We've broken the low of the last week or so. 1371 area was some support. And we dipped below that, but look at these two spikes on the last two candles. There are some buyers down there, and it's getting pushed back up above that 1371 level now. So yeah, we've got quite oversold on the 4-hour chart. So maybe we will get a little bounce. I'm not enough to get bullish about this, but well, we are getting a little bounce anyway. Look at it now, 1373. It's quite climbing quite quickly. Okay, so where could we go to on this 4-hour chart? So we sold. Maybe we'll get a little rally for a day or two. Last 4-hour candle is bullish. You're right. We haven't. Yeah, that is quite bullish. So we're looking probably at 1381 as our immediate target. If we can get through these little lows here, 1376, 1377, 1378. That was also the high of the last candle. So that's where that's going to be our first challenge, 1377, 1378 area. But if we start to get through 1381, that would be quite positive. And looking at the 4-hour stochastic, there is a chance of that. And then who knows, we could see it up around that 1389, 1391 area, by which time we might start to look overbought. We'll just have to see where we are. The bigger picture is quite negative, so selling into strength would be possibly the safest trade at least. If we do see into the high 80s, low 90s, maybe that would be a good area to try a short again. But yeah, in the very, very short term, maybe even over the next 24 hours, we could see a little rally up. It looks like a good possibility, just very, very, very short term. Aussie against the yen, sure. Okay, Aussie yen. Here we go. Weekly chart. I don't look at this regularly, so give me a sec. Okay, so we are testing 2011 highs. 9000 area. 9003 was possibly the exact high, was it? Yeah, it looks like it. Okay, so we've got as far as 9018 this week. There is some support. Well, it's a yearly high, so it's always going to be an important support level, and that is holding at the moment. But the general picture isn't particularly bullish now that we've broken 9366, and that was actually the high of this week, 9379. Okay, so we tried to revisit that fib level, 9366, and it didn't work. We've backed off. So 9300, 9366, I guess, are the levels on the weekly chart we've got to watch at the moment. Daily chart, it's got oversold. We've got a fib extension on there, which seems to have held quite nicely, 9022. Other than that, okay, we've retraced about 50% of that last rally from the low of 20. Is that the low of 2012? Yeah, the low of 2012. Okay, so from 2012, middle of 2012, we rallied up to April, and we've now corrected 50% of that. So yeah, we're at quite crucial support. 9020, 9000 area is quite important support. It's the high of 2011. It's a daily Fibonacci support level. This happens to be a fib extension, which I left on there. I don't normally look at those, but that's quite interesting that that's held. And we're quite oversold on the daily chart. So if you're short, possibly it's worth covering at least some shorts here, because this is quite good support. But I'm concerned that we're sitting below the 200-day moving average. If we close below there today, that's not going to be very helpful. And obviously 89.90 is the big area to watch now. If we start to get breaking below there, we are going to be in further trouble. And looking at this downtrend, you wouldn't bet against it, even though we are oversold. It is a concern. Anyway, that's definitely the level to be watching, sort of 90.20, 89.90 area. That's going to be important. And then, you know, whether we close above or below will probably determine the direction for the next day at least. Short-term 4-hour chart is looking quite negative, but that's obvious. We're in a downtrend. We've broken last week's low, which was 90.55. We've broken that today, so that's not a positive. Obviously, that's not helpful. The short-term stochastics are still quite negative, so all I can say is watch that 90.20, 90.00 area really. If you're trying longs here, well, you've got a very nice tight stop at least, because if we break below 89.90 sort of area, you're going to be looking to cut out of any longs. So in that respect, it's a relatively low risk-reward trade, I suppose. But other than that, I wouldn't necessarily be advising to be trying to pick a bottom in this market. It looks a bit too risky. On the top side, if we do find a floor around that 90.20, 90.00 area, well, we've got 91.78 as a 200-day moving average, and that also happens to be yesterday's low, I believe, 91.80. So that's the obvious area that we'd be looking for a bounce to. Which, as I say, if you were trying longs around here with a tight stop below 89.90, then there's quite a good upside. You've got, a cent and a quarter or something up at 91.78. So, you're probably looking at least 2-to-1 risk-reward ratio. That's not a bad trade. I think a lot of people would be happy with that sort of risk-reward ratio, especially when you're looking at relatively good support around 90.00. So yeah, maybe let's see if it does continue to bounce off there. And if it gets through 92.00, then you're probably looking at that 93.60 area. The high of today and yesterday was 93.71, 93.79. Okay, so 93.60, 93.80 is going to be the first real big test on any bounce. And so we'll just see what happens if we get up there, really. I guess, can I add any more to that? Not really. 4-hour chart, as I say, yeah, not that positive. 90.55. We were sitting above last week's low now, 90.60. So we're just managing to recover above there. Let's see what happens. Maybe we can get back to that 91.60 area. That's going to be a struggle. 91. Sorry, is that? Yes, 91.60, 91.80. We could get there, but it's going to struggle there, I would have thought. Is that enough? Don't know if I can say any more on that pair. Don't think so. Okay. If there's anything else, let me know. We have got a little bit more time, I think. What, 5 minutes or so? 10 minutes? Maybe we'll have a look at the Aussie dollar then, seeing as we're on that kind of thing at the moment. Here we go. We've had a look at Aussie versus something else a bit earlier, didn't we? Anyway. Okay, so Aussie dollar. This has been in the focus recently. Lower again today, lower again this week at least. This is a weekly chart we're looking at. 95.77 was an obvious support level, being the low for... Yeah, it was. By the looks of it. Yep, 95.82 was the low for 2012, which coincided nicely with this Fibonacci 50%, 95.77 level. That was broken last week. We closed below it last week for the first time since it made a low in 2012. So that's quite a significant break. And we've continued lower again this week, which obviously for that reason is a massive surprise. On the weekly chart at least, we've got So the 2012 low was 95.82 and the 2011 low was 93.88. We've got to 93.26, so we've broken the 2012 low as well this week. And we're just sitting below there at the moment, so this is all very negative really. Just to add to that picture, you've got quite negative weekly stochastics. Daily chart got quite oversold, but didn't bounce very far to say the least. So yeah, pretty weak picture. Can't really see anything to get bullish about or look for a low in the Aussie dollar really. 4-hour stochastics are oversold, but hey, so what? That's not really any good reason to be piling into this one. So yeah, stick with the trend. Doesn't look very good. Where could we hope to see a low? Well, according to the fibs I've got on here, we've got 92.22, which is fairly good support, and then 38.2% retracement of that whole rally up from the end of 2008. I'm guessing that was the low in 2008. Yes, it was. Okay, so we had a big old crash in 2008. That was the low, and then we had 3 years of going up. Okay, so we can probably continue lower in this Aussie dollar. As I say, no reason to get particularly bullish about this yet, but the target's a 92.22. We'll probably see that now that we've broken the 2011 low. That would be a 61.8% retracement of the low from 2010 up to the high in 2011. That would be an obvious target. Whether we'd be buying it there, I'm not sure, but 91.43, perhaps we could be starting to hope for a low, for a bottoming out anyway. 91.43 area, that's a good Fibonacci support level, and we should be very oversold on the weekly chart by then. And we should be back in the low oversold territory on the daily chart as well. So I'd suggest that's probably what we're looking for, 92.22 and possibly even 91.43, and maybe that would be somewhere we could start thinking about trying longs. We'll have to have a look when we get there. A bit too early to say at this stage, of course. We'll have to revisit that picture. Aussie versus the Kiwi. NZD. Okay. Oh, blimey. I don't think I've ever looked at this one. Aussie versus the New Zealand dollar. Right, where are we? Okay. Ooh. That don't look too good. Oh, we're done, are we? Okay, sorry if we've run out of time. I do apologise. I'll definitely have a look at that one again, or if you want to contact me on my website, I'll happily look at it for you privately. You can get my contact details at my website if you want me to have a quick look at that Aussie dollar, New Zealand dollar. Thanks very much for joining me today. Appreciate it. Hope you can join me next time. Thanks very much indeed.